Good morning. My name is Manny Kagan. I'm a mortgage broker, president of Pacific Bay Financial, founder of Money Solution Academy. And today we're going to start exciting new course. It's going to be called Mortgage Solution for Smart People. 5 P's, letter P, and how to connect them. And idea to start this company actually start from this young lady. What's your name?
Irina.
Last name?
Irina Harris.
Irina Harris. Okay. Irina came to my office 3 days ago, I think, yeah. And she told me that she wants to become a mortgage broker. Not just a mortgage broker. She wants to, she used very special Russian word, which means that hard mortgage broker. Now it's somebody who is very successful. Well, I wish her luck, but then I agreed to teach her to become one. Oh, it's not easy. And then on my left side is my trusted assistant. Without her, I don't know what I'm doing. And your name is?
Elena.
Last name?
Polak.
Okay. So I am privileged to sit in between two smart ladies. I mean, okay, I will keep all those adjectives to myself. The point is, let's talk about mortgage business, which is complex. And the way we're going to be learning this business is through analyzing specific cases which we're working on. So each of them will have those 5 P's, and actually there'll be a book to follow this. And let me tell you first case which we're going to start, which we just started about a week ago. I went to the open house to see the property of a friend of mine, and there I met clients, which was a couple, young couple, not married, and their mama. It's important because in this case, mama is giving them money for the down payment gift. They have some money, but not enough for the down payment, and so mama becomes part of the whole picture. They made an offer on a property which we've seen it was a house, and they claim that they would like to buy another house. After real estate agents start showing them property, they decide instead of a house to buy a condominium, and they found one. So price was right. They made an offer. They had to increase the price to enable them to get it. They got it. We're in a contract. Everyone is happy. Well, we start working on this. And before starting this, I gave them pre-approval letter because I analyzed their income. Money was there, income was there, credit score was high, 754. So it seems on the surface it's slam dunk. And we price the loan based on the internal system which we have. Interest rate was good, everything was there. And then when we received disclosures of the property, and it was condominium 10-unit building, then problems started, as it sometimes happens. The problem was that this building had 10 units. 3 of them were owner occupied, 2 were not owner occupied, and 5 were owned by one person who actually inherited from his father who developed this project. Okay? This created a situation where it cannot be simply solved. Situation was based on it's called when we talk about condominiums, they have loans which could be sold on the second market and loans which couldn't be sold on the second market. That's how they call it, those loans?
Non-warrantable.
Non-warrantable. Okay, so the warrantable condominium project can be financed and sold on the secondary market. Non-warrantable cannot be done through conventional lenders. We have to find other lenders. How many lenders we send it to request?
A lot.
How many would you say?
I say 15 maybe.
15 lenders.
Yes.
In other words, we had to reach out to 15 different lenders. When we say lenders, it's a name, it's a mortgage banks who are internally have investors. So those investors are those who are buying those loans. In other words, after a loan is done, that has to be sold. Like if a conventional loan is sold to Fannie Mae, Freddie Mac, unconventional, non-warrantable are sold to different investors. And this is a problem because so far, and we're working on this already 3 days.
Yes. I mean, actually, yeah, 2.
2 days. Okay.
Yeah, we got the HOA docs yesterday, so we found this issue.
Yes.
Start work.
We identify a real issue, and there is a number of real issues. It's not only it's not warrantable. There is issue with some
Special assessment.
special
for the
assessment, which
fire.
costs money, etc., etc. All those things affect our ability to make this transaction happen, right?
Yes,
So what's the solution? Do you know what's the solution?
find the lender.
So how do you find it?
I just our connection, our approval, because we are broker. We're not
Uh-huh.
just like one lender. Like
Yeah, and basically
Retail.
the only way we can do it is just sending information out, because we ourselves don't know. If you have conventional mortgage, I can easily calculate ratio. I can look on income. I can money down payment. All of these things are easy, but I haven't seen easy loans lately for
That's
some
true.
reason. Yeah, every
Because-
time there's something else, something quirky in a loan. Now, you are hearing this first time? Or did you hear it before?
No,
No, never heard it.
no, heard of course.
But not in the essence, because you told me that you would like to meet real estate agents and talk to them and
Yeah,
try to get
yeah,
business with them. So how can you do it if you don't know those things? Can you do it?
With you, of course.
With me. But let's say I don't exist. Can you go out and find somebody who will trust you that you can do it?
At this moment, no. I have tried. I have talked to lenders.
Before? Yeah, okay. So you see, it's not simple. You need somebody who knows it, and I know a lot, but Lena knows more than I do. So
No, actually, I will say when you talk to the lender, some lenders, because we the way how we connect, we call our account executive, and they don't know when they look on the document, they also can like miss something. So you need to point them where to look, or someone they just give you rates and say, oh, we can do non-warrantable conduct, but what is the issue? They said, did you look on the HOA cert? Did you see that it's like 5 units occupied by the one person? So it's not, if you have these guidelines and you can do this non-warrantable, good. But they don't look like, like we're all humans, we can also do mistakes, but it's really important that they say we can do based on the documents, and they understand these documents too. Because some of them, they also don't know how to read these documents. So.
hearing to you, I feel about this. Let's say if you go to a bank, conventional bank, and there's a loan officer.
Yeah.
And loan officer maybe give you a piece of paper which called pre-approval. But can they do this loan the level we can? Do you think they can?
No, because they count, they just look on the documents for borrower, not for the property. And this is different departments, like condo department, they have their own guidelines and they need to review whole project. So you start the process, you send everything, and you waste time for everyone because you didn't look up front, let's say HOA documents, before you send file to the bank. So it's better to review all documents up front, because we could submit this loan right away on the first day when we got this purchase contract, got the title fees, and without HOA documents, let's say. But if we send the normal conventional with the good rate, what we can get after we submit this HOA documents, they will reject this file because it's out of the guidelines.
Yeah.
So,
Okay. But there is another interesting element, and which goes to when you brought up real estate agents in particular. Because when real estate agents entrusted to us, because most cases real estate agents refer us clients. Sometimes clients know us before they work, but in most cases they refer somebody. They refer, actually, they're putting their commission online. Because if we will not close this loan, they will not have money to pay their mortgage. Therefore, they're nervous, very nervous, because they don't know what's going on. If we don't know what's going on, how would they know? So one of the very important part of relationship, you have to keep them informed. You have to keep everyone informed about everything what's going on, even it's negative information. You have to tell them this is what it is. We are working on this, and based on our 40 years experience, we know that we'll find solution. The issue is, in this case, is different. Because it's not conventional loan, the interest rate is going to be higher. What happens when interest rate is higher?
The debt to income ratio.
Qualifying ratio, because higher interest rate, higher mortgage payment. Now, first of all, borrowers have to agree to higher interest rate payments. If they will not, then its transaction will be off because they can back up from the deal, right? If there is a time to do this, because sometimes real estate agents make non-conditional offers, and then it's jeopardy.
Yeah.
And we don't know this until we have the property. That's I only once I think lost transaction because the circumstances where we couldn't do this loan. So point is like this: every transaction can be complex. We know what we're doing to extent. In our experience, I think I only 40 years. I think I only didn't close 2 purchase transactions. Yes, I could say it's beyond my fault. It wasn't my fault. It does not matter. We always find solutions, and we will find it in this case. Thank you, and thank you.